In the last video, I showed you one small tweak to selling covered calls that allows you to capture that juicy at-the-money call premium while still benefiting from some capital appreciation. What you see in front of you is the live trade that I showed in my Tasty Trade platform. It might sound impossible to get capital appreciation at the money, but watch that video. And in this video, I'm going to show you what to do when my covered call setup from the first video simply doesn't show up. The good news is there's a backup setup that is almost as juicy, and it's actually more conservative than the setup you learned about because it does not involve temporarily selling a naked call. So here's how it works. Let's say you're looking at a good high volatility large cap stock candidate that had a nice big gap in the morning, and you're waiting for that opportunity to fade late morning weakness by selling that naked call option. As you see in this example, we did get the anticipated weakness, but it happened early morning, not late morning. In other words, the stock fell significantly within just the first 30 minutes or so from the market open, but the juicer setup requires the weakness to occur after 10 a.m. Eastern Time, and preferably after 10:30 a.m. So what do? We're going to execute a backup strategy that I call the old man juicer setup, which is more or less the same thing as a traditional covered call, but with one key difference, which is that we get a significantly better price by practicing some patience. The entry criteria are exactly the same. After the pullback in price in the morning, we want to see a close above the 9 EMA on the 5-minute chart, and we want the relative strength indicator to be above its moving average, which shows us that the stock is once again starting to outperform the S&P 500. For exact indicator settings and how to find it on TradingView, be sure to watch the first video. Now let's see what kind of difference the old man juicer setup can make for our bottom line. If we had entered in the first 5 minutes from the market open, sure, we might have gotten a slightly higher options premium, but our break-even price would be pretty terrible, right around 68 bucks for an option expiring at the end of the week, right around here. But by using the old man juicer setup, we reduce our break-even all the way down to about $66 a share. So let's see what happened in this trade. The price expired at $66.33 at the end of the week, which means that the old man juicer setup would have still made us some money despite the stock moving lower the second half of the week, whereas entering with no discretion whatsoever would have lost us almost $2 per share. And if you want to practice and perfect these very setups in your trading and take your options income to a level that I guarantee you don't think is possible yet, I recommend that you check out my Options Juice Club. Members receive daily emails with timely opportunities to generate income in the highest IV stocks every week. And I make all posts public after options expire, so you can literally look through my track record and see how my past trades performed. And in the next video, I'll show you another indispensable trade setup in my arsenal called the reverse juicer, which is the strategy I use in the rare cases when I'm extremely bullish on a stock or ETF. And in the video after that one, I'll show you how to turn your favorite Bitcoin ETF into a weekly income machine. Thanks for watching, and stay tuned for more income generating content.